Hi, it's Larry Gaines, Power Cycle Trading. Well, the broad markets, as you know, have had a great move to the upside and kind of are treading water now. But there are quite a few interesting looking stocks, and one of them is Tesla. Right now, currently, it's up at its 52-week high. Here's a weekly time frame chart of it. So you can see the prior high was back here in February. It went up to 266.37. We've had a nice retracement back to the major moving averages here, the 21 period and a cluster of other moving averages. It held, made a low back here in May, rallied back up, pulled back, hold in the moving averages, and we had a nice explosive move the last week or so back up to these prior highs. So you're back to the 52-week high. Now the trend has been solid up. You've got good momentum on our cycle 1, cycle 2. And this is using a weekly. I like to look at Fibonacci extensions for symmetry. So taking this pivot swing low here on the 5th of May and then taking that swing high on the 30th of June, you take this point AB, this symmetrical move here, and you take it to the next swing low on this pullback to the 21, and this will give you a potential swing high symmetrical target high. So the markets like to move like in symmetrical type moves up, pull back, and then they usually will follow very closely these type of symmetrical moves. So from here to here, then from here to here. So nothing to go straight up or straight down. So just looking at this little analysis puts potential for Tesla to get back, for it to be a 100% of this symmetrical move back from May to June. It potentially can reach 281 to make it the same distance as that, and it could even go higher than that to the 1272 extension at 299. So the question is, how does it get there? Well, what we look at is for consolidation and what we call volatility squeeze, or when the market's consolidating, catching its breath, coiling, getting energy back, and then it'll take a next run or break to the upside, usually in the direction of the trend. So let's look at some of the other time frames and see what's going on there. First off, here's the daily time frame. You can see how it's consolidating up here at the top at that 1618 extension from that symmetrical move, and then it's been holding the 8 EMA and the 15 right here. So it's been coiling, holding above these moving averages, just kind of consolidating, catching its breath, gaining energy. So then what you want to do is find out if there are any other time frames that are showing what we call the volatility squeeze. So let's go and just look down from 1 hour. Well, when you look at the 1 hour, you can see we're in a compression squeeze. These dots are part of my indicators in my trading system that says we're in a very tight volatility squeeze. My indicators on the hourly are up above 0 on cycle 1, 2, so the probability is for a break to the upside. That's on the hourly. 30-minute, you can see it's also in a consolidation squeeze. Indicators are up. 15 minutes, indicators are up. Squeeze that just triggered right at the close. And the 5-minute triggered earlier in the day, right there at about right before the top of the hour of the close, and triggered to the upside. So what do you do in this situation? Well, the markets are extended. So what I like to do is look for defined risk, kind of low risk, high probability type trade setups. And one way to do that is with the in-the-money bull put credit spread. Now with a in-the-money bull put credit spread, you want to set the trade up where your short leg is at a potential price point that the market, you think that Tesla will hit and exceed. So right here we can look at the prior high is right here at 267.26. So a good probability that we can get through 267.5, and if it goes through that, there's a good probability to 281. Now the other way to do it is set it just below this target of 267, so something around 265 in that range would be a good target, and then you set your spread up accordingly. So here's the Tesla. This is a weekly option, expires in 2 days on Friday. So here's selling the 265, buying the 262.5 credit spread, $2.50 wide spread, credit $1.40, nice profile. you just need to close at 265 or above. On Friday, you make 140 in credit. Your max risk at loss, most capital at risk would be 110, so better than 1-to-1 there. And the other type of trade setup would be a little bit more aggressive, a little bit more risk, sell the 267, buy the 265, and on this trade you collect $183. Your max capital at loss at risk would be 67. So these are two trade ideas. Nice profile, good way to play, potential upside, but also really measured as far as measuring your risk, and a nice risk-reward ratio. Hope that helps. Talk to you on the next update. Here's another quick side-by-side look at these two trade setups. So Tesla on the 27th of August trading at 263 and a quarter. The more aggressive trade is the 267.5, 265 bull put credit spread. You can see 183 at 67 credit, and the other one, the 265, 262.5, 140 at 110 max capital at risk.